Have you ever questioned how much you could anticipate making in the stock market and whether you should invest outside of your own country? These are frequent questions for investors. They also have a connection to an important concept in active markets. How much can you expect to profit from your investments? Stock market and bond market returns have historically fluctuated greatly over time. The stock market has risen by 20%, 30%, or even more in certain years. In other years, it's down by 40%. However, stock returns, or equity returns as they are frequently referred to, have averaged around 12%. That's an excellent rate of return. However, it conceals a crucial fact. Returns vary greatly. A 1% or 2% increase it is usual to relocate daily. However, markets typically fall faster than they rise. So, while gains may have averaged 1% each month for the first 9 months of the year, they may collapse 10% in October and November, bringing the markets to flat for the year. In today's markets, there are two categories of investors. Individual investors such as you and me, as well as institutional investors, are large corporations that purchase and sell stocks on behalf of individual clients. These institutional investors include firms such as Vanguard and Oppenheimer, Reliance Capital Asset Management Company, HDFC Asset Management Company. Historically, institutional investors have done a better job of weathering stock market volatility than retail investors. That is one of the reasons why small investors have been vanishing. Today, institutional investors such as BlackRock and Vanguard hold 80% or more of the equity in many companies. At this stage, you should have a better knowledge of what to expect from your stock market investments in terms of both return and risk. So, as you move forward with your future investments, ask yourself 3 things. First and foremost, am I being realistic about how much return I should expect on my investment? Second, am I mentally prepared for the risk I'm taking with my investments? Will I be able to sleep at night if I lose 30% of my money over a few months due to a stock market crash? Third, am I satisfied with the day-to-day changes in my portfolio, or do I need to make modifications to make it less risky with a lower associated return? After you've answered these 3 questions, you'll be able to assess whether or not you're ready to begin investing.